Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute, end of the day wrap up here. What a finish. The S&P just fell out of bed. Stocks fell out of bed at the end of the session. Really what it was, though, setting up is a close below the 200-day moving average. And we talked about it in the Morning Express today. A close below the 200-day moving average is going to get things very ugly. That's what we're seeing here. So ultimately, now the S&P is down below 3,000. And if we stay, our next level, stay below about 2984, path of least resistance is to 28.5, which, you know, given the fact that we're down more than 100 points today, isn't that far away. But really the levels that come into play now are for the NASDAQ. There's a big trend line right about where we closed today. So keep an eye on that 8370 area. And then below there, 8250. It's a huge retracement. Same way that 2984 is big for the S&P. So you got 8250, you got to watch the NASDAQ. And then below that is 8170. You have the 200-day moving average to 8170 in the NASDAQ. And then below that is 8050. 8050 brings you to the previous high about over the summer in July. So look in the NASDAQ, 8370, 8250, 8170, and then 8050. Those are a lot of levels of support to watch. But also, tomorrow's Friday. We're heading into the weekend, so weekly closes are crucial, but right now it doesn't look like we're going to get any type of good weekly close given the damage that we've seen on the chart today, and of course if the S&P stays below that 200-day moving average, and especially below 2984. So keep an eye on that. But who's going to want to stay long into the weekend given this type of close today and the uncertainty that coronavirus could continue to spread? Obviously, we're hearing numbers in Europe rise. Now there's cases in the U.S. rising. Death toll across the world is rising. I mean, you're seeing numbers nearly pushing towards 20 in South Korea and in Italy and Iran. And then if we get a death here in the United States, then that's going to get some real fear going. So keep an eye on stuff. No one's really going to want to buy into Friday unless there's some sort of act from the Federal Reserve, which, remember, we could hear something from the Federal Reserve. The market is pricing in a very high probability that they will cut rates at their meeting in a few weeks right now, and almost a certain probability that they will cut rates sometime between now and April. So keep an eye on that. And then look at some of the other markets. We got crude oil. Crude oil on a weekly close. Watch for $49. If we stay below $49 the way we are right now, that's ugly. That's also pressuring stocks. Commodities are pretty weak, but it was actually surprising that copper came back on the session. It was down very sharply, came back on the session. So keep an eye on copper as a pulse here, how bad some of the risk sentiment is. We'd expect copper to trade lower overnight. And one thing we get with crude oil, 45.5 on crude oil is a big level to watch. And if we get below 45.5, really the next stock could be 42.50. So those are some of the things we're watching. And then lastly, from the safe havens, gold seeing a little bit of life here after that selling at the end of the day in equities, but you know, gold just can't really get out above 1660. A lot of resistance there at 1660, but more importantly is the amount of support below the market. 1620, 1615 area. That's the area that has been proven to buyers are stepping in front of there. We were more patient. We were talking about waiting for move into that potentially into 1600. Doesn't look like we're going to get it, but as long as gold can really stay roughly above 1620, the bulls are in the driver's seat at this point. But if we start closing below 1620, we can start to see some precipitous selling. If that were to happen, we're likely to see the equity market bounce back pretty sharply because the dollar is very weak. It's another big down day in the dollar. Should have supported gold better than this. Didn't, but a lot of support here, about 98.25 in the dollar index. Looking at the euro, 110.10. That's a big area to watch. So we're hitting at some inflection points here in the currencies as we head into tomorrow. PCE, which is the Fed's preferred inflation indicator, comes out tomorrow. We get final Michigan consumer data as well. So keep an eye on stuff. Bullard, St. Louis Fed President Bullard, he talks tomorrow. He's not a voter this time around, so he's been one of those ones that have been extremely dovish in times like this that can really send the market higher. He's not a voter this time around though, so he may not come to save the market. But keep an eye on what he has to say. And then lastly, look at the treasuries. 167, the 30-year, has been that area of balance through the day, and we stayed above there. There's a big trend line area looking at 166. We break below 166 in the 30-year, we can start to see that thing go further. Obviously, if that were to happen too, the equity market's probably roaring back. So keep an eye on all that. We're here to help. Don't hesitate to reach out to us. You can even email us, info@bluelinefutures.com. Give us a call, 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.